Welcome back to Instables. Again, going over our intraday swing and long perspective as we're leading into Fed minutes on Wednesday, where we will get our next monetary policy update. Will we have more tightening to come, or will we possibly have more loosening to come? Again, this is after CPI came out higher than expected, although lower than our prior month. And then a couple days later, we had PPI coming out, our next inflation report coming out higher than expected. So again, showing us a possible peak in inflation, which could possibly give us more restrictive policy to come that the Feds have been mentioning throughout the weeks. So again, we need to make sure we are careful. Where exactly may we be headed leading into Fed minutes as we anticipate leading into Wednesday? I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy, subscribe if you're new to the channel, and if you are a day trader, if you're looking for pre-market news before market open, looking for those major volatile breakouts that you want to be watching throughout the day, go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the SPY with you guys here, looking at our intraday momentum off the bat here again, as we did drop below our 20-day moving average, and now we are retesting, as again, we do open on our green candles lower here, and then we do close higher, showing us that we are very much retesting here as we're leading into Fed minutes on Wednesday. The market will be closed tomorrow, although on Tuesday we will have anticipation from our PPI report that we had higher than expected, and also our CPI that came out higher than expected, but although lower than our prior month, we will have anticipation possibly leading into Fed minutes with a possible continuation on a pullback. But again, our overall momentum this week will predicate on what Fed minutes data we do get. Again, if we have more restrictive policy to come, possibly because our recent inflation reports came out higher than expected, and we have not got our increases in unemployment that, again, Powell has been looking for the last 3 to 4 months. So we're taking that in consideration. We have this anticipation of a possible peak in inflation and possibly more inflation to come if we do continue on with increases in inflation and continue on with higher than expected inflation, and also showing that we have a longer restrictive policy to come. So again, that will be our anticipation leading into Wednesday. We'll see exactly what happens. I definitely would be cautious on Tuesday, as we will have, again, anticipation leading into Fed minutes on Wednesday. So again, keeping that in mind, intraday, very cautious, in my opinion, to the upside. So if we do jump above our 20-day moving average, that will be a signal only for us to look for confirmation on that continuation, or we will possibly get that rejection intraday and have that pullback again leading into Wednesday. We very much will be cautious playing to the upside, in my opinion. Now, looking at our swing perspective here on the weekly chart, as you guys can see a couple weeks ago, again, mentioning that we did close above the upper end of our channel that we have been getting rejections from multiple times here. So again, multiple rejections, closing above the upper end of our channel, continued on with that strength. Now, assuming if we are going to continue with that swing momentum, we do want to assume that we need to retest our 20-weekly moving average if we are going to cross higher here. So again, going into next week, what we will be watching for is to see if our 20-weekly moving average does cross above our 50-weekly moving average. So again, that's what we're going to be watching out for. We want to see if we do have that assumption on that retest, and again, for that possible bullish candle structure, or if we are going to get a rejection, possible major sell-off, then our 20-weekly moving average will not cross above our 50-weekly moving average and get that bullish candle structure. So again, that's what we're looking for as far as confirmation on that swing momentum. Again, a nice continuation that we did have recently, but now sitting on a cool down. And now looking at our monthly chart again, as we have been talking about, again, looking at our monthly chart, looking for that assumption that we would be rejecting our 20-monthly moving average, since we are testing it intraday. And as far as our swing of momentum, this is what we have been looking for as far as our overall strength. Again, this candle has not closed. We still have the rest of this candle to go. 2 more weeks to go till this candle does close. So again, assuming since we were testing our 20-month moving average, this was a solid candle prior, and then now looking at that rejection again, as we did assume, and having that cool down again with our daily 12 EMA crossing below our 26 on the MACD, as we did mention. And again, with our recent strength, again, we did mention that our 12 crossing above our 26 will be key here as far as that long-term momentum. Again, our 12 crossed below our 26. Again, about a year ago, we did have that continuation on that sell-off here. So we are very much looking to see if we will possibly curl back up here, cross our 12 above our 26. But if we do not, then we will have, again, that narrative of our 12 crossing below the median of MACD for that major sell-off, and then looking for that possible cross later on. If we're going to be looking for any continuation, will be key. But again, this monthly chart has been telling the tale for us here, guys. Again, as we're testing our 20-month moving average, a very strong resistance on the larger time frames, very much on a cool down at this point in time, but very much going to see if we do possibly get any bullish momentum if we do possibly close above our 20-month moving average going into this month will be the watch as far as that long-term momentum. And to recap on our intraday perspective, again, closing below our 20-day moving average, looking to see if we will close below 405 for that assumption that we would test 401 since we did drop below our 20-day moving average, or to the upside if we do close above our 20-day moving average going into next week, we'll be looking for that bullish candle structure that we have not got here above our 416 resistance that we have been talking about again from our prior major gap down that we had here. So again, this gap down here at 416 has been the number one watch that we have been watching. And as you guys can see, we have not broke our 416 level, closed above it since we did test and we did look for that possible bullish candle structure. We have not closed above that 416 level. We will see exactly what happens going to Fed minutes on Wednesday. That very much will predicate exactly where we're going to head next, in my opinion. And again, in my opinion, as we have bad data, again, bad PPI data coming out on Thursday that we did have a pullback from, we may assume that the Feds may have a restrictive policy to come, as a lot of them have been mentioning, and that Powell may react similar to those Feds that have been speaking throughout the last week. So again, keeping that in mind, a lot of Feds have been pretty hawkish, mentioning that we have possible increases in the rates to come if inflation does show us any more increases like we did again with PPI on this gravestone doji. So again, keeping that in mind, we'll see exactly what happens going to Wednesday. We will be cautious. Now again, with that said, if you are a day trader, if you're looking for very volatile breakouts within the same day, we mention them every single day in the Instabills room. Any pre-market news that you want to be watching, again, if you're market prepping, if you're looking for any movers that you may not have seen throughout the day, again, go to instabills.com in the description below, and you will never miss a breakout alert today. Again, all of you Instabills, again, staying consistent will be the number one key in the Instabills room, especially in this environment that we have with possible low volume on bad data, and then we get more volume on anticipation on better data. So again, just taking what the market gives us on what the market has to offer is what we will continue to do, and staying consistent, again, very key. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.